Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new day and the cues coming out of global markets are fairly mixed. Of course, we saw a good rally coming in on Wall Street overnight, but it's the Bank of Japan decision that will, chart the course for where the Nikkei is headed, given the fact that it was trading in the red ahead of the all-important BOJ rate decision. Aside of that, lots of stocks to watch out for. We had a few earnings coming in post-market hours. We'll be talking about those. We'll have, we'll be discussing some stocks that are making headlines at this hour, and we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us, and we will try and take them up as usual. But before we go any further, let's take a look at the top headlines at this hour. Wall Street stages a smart rebound as indices start of the week on a strong note. S&P 500 moves out of the correction territory, while the Dow sees its best day since June. Meanwhile, the street is awaiting the Fed's interest rate decision, which is due on Wednesday. Asian markets trade mixed ahead of the Bank of Japan's policy decision. The GIFT Nifty signals a flat start for the Indian market. Crude slips below $90 a barrel ahead of a key Fed rate decision. Gold, meanwhile, remains above $2,000 an ounce amid escalating geopolitical concerns over the Israel-Gaza war. TVS Motor reports a strong set of numbers in the second quarter as margins come in at all-time high. Meanwhile, Marico's second quarter profit and EBITDA both beat expectations. In key earnings today, capital goods major L&T is expected to report a 17% growth in revenue, while order inflow trends will also be key to track. Bharti Airtel is expected to show a 2% growth in ARPU, while Tata Consumer may report a strong set of numbers as well. And also on the spotlight will be Butterfly Gandhimati as the shareholders reject merger with Crompton. Well, on that note, let me first bring on board our technical expert for today. Joining me is Sacchitanand Uttekar, who's the VP Research, Derivatives and Technicals at TradeBulls Securities, joining in. Great to have you on the show, Sacchitanand, as always. Well, over the last two sessions, we've seen a very smart comeback, by the markets. In fact, the Nifty now hovering around that 19,150 mark. What are the resistance levels that one should be watching out for on the Nifty on the higher side? Sacchitanand, I think you're on mute. Hi, good morning.
Good morning, Nandita. I'm really sorry for that. As you've seen yesterday, the recovery has been very strong. In fact, it has been a very good start for the week. Nifty did make an attempt towards its 5-day exponential moving average, which is placed at around 19,150. It has still not managed to close above it, but probably looking at the cues today morning, the way we have seen a breakdown in crude oil prices, probably that could help the Nifty scale higher towards 19,300, 340 kind of a zone. I think for this particular week, the main resistance is placed near to that particular cluster. So going forward, we are of the opinion that the Nifty could remain on the positive side, keeping a very brief support zone somewhere close to around 19,000 for this particular week. So we are not expecting any major slippages below the same. But if you look at the overall broader structure, we have already seen a very strong low top, low bottom sequence here. And on the daily scale, Nifty is still not exhibited a very strong reversal formation. So I think even for today, one can trade with a positive bias, but the range which has been evident on the higher side as a resistance is somewhere close to around 19,280, 340. And on the lower side, we are, of the opinion that the floor is well set around 19,060. So probably we may see Nifty oscillating within this particular range itself.
All right. What about the Bank Nifty, given the fact that yesterday we saw, I think, an over 500-point recovery from the day's low? What are the levels you'll be watching out for there?
For Bank Nifty, it is still, struggling below its 200-day exponential moving average, which is placed somewhere close to around 43,260, 300 kind of a zone. So until unless we don't see a confident closing above it, we may not see a very strong rally getting built in when it comes to Nifty Bank. On the lower side, though the support is placed somewhere close to around 42,700, 42,680. So even here, we may see the Nifty Bank also oscillating within this particular band. But if you look at or compare both the indices, then clearly, Nifty is still standing out, and we may see that leadership getting continued by Nifty itself.
All right, hold that thought, Sacchitanand. On that note, we're also joined by Asutosh Mishra, who's the head research at institutional equity at Ashika Stock Broking. Good morning, Ashutosh. Great to have you on the show. Let me straight go across to, come across to you and talk about specific stocks. Given the fact that we saw quite a bit of a sell-off coming in on Emami Financials, of course, margin concerns are there, and the street was reacting to poor show in the second quarter. Collection efficiency has also gone down. How should investors approach this stock post the second quarter earnings?
So I expect stock to remain languishing for at least a quarter or so. If you look at all the results of the NBFC's company and especially vehicle finance company out there, you will find that they delivered the weakest. So on all major count, including NIMs, including asset quality, everywhere there was a disappointment, and this was a bit surprise to the market. Given the expectation was totally different, and there is also concern that some of their dealer fundings and how the things are channelizing in that area out there. So I think for a quarter or so, the stock may remain at a current level. But if you look from the medium to long term perspective, it looks quite good out there for me. But yes, short term, I don't see any substantial movement in that.
Right, no substantial movement on short term movement on Emami Financial. But what about AU Small Finance Bank? The merger news didn't really go down very well with the street. In fact, I just looked at our live feed. We have a query on this particular stock from Saurabh Gupta. How are the fundamentals stacking up for an AU Small Finance Bank now?
Fundamentals stacking quite well. If you look at 3 years picture or 2 years picture for the combined organization, it looks quite good for the both of them out there. But whenever these mergers get announced in the banking space, short-term pictures are always quite difficult because you have a management bandwidth goes toward the resolving the merger-related issues and the regulatory concerns, regulatory requirement, and all other things, addressing regulatory requirement, all other things. Further, one more concern which investor had at this point of time is that the current portfolio structure of AU is more towards a secured loan, whereas post the merger they will have a increased exposure toward the MFI, which is totally unsecured. And we have a lot of discussion in the BFSI circle at this point of time about the unsecured loan exposure out there. But in my view, MFI business has seen a major turnaround. If you look across all the MFI results in this quarter, you will find that they have delivered very good set of numbers. This mix is quite good for the EU from the long-term perspective, but short-term, any merger create a lot of issues. And here also we are going to see overall performance of EU dipping because of the focus of management toward this merger. We have seen this in the HDFC Limited, HDFC merger. And in the past, we have seen in the Kotak merger case also. So the market main concern is about short term, and the stock valuation is at relatively higher level. So combination of these two has resulted into this reaction of the market. I don't see that investors will rush in at this level to the EU, but probably in the next 1 year you will get a very good level to enter into the EU.
All right, merger overhang to continue for some time, but over the next 1 year, of course, you may get an opportunity to perhaps dip into the stock. But let's also talk about Crompton as well as Butterfly Gandhimati. Of course, there is news flow around these two counters, given the fact that shareholders of Butterfly Gandhimati have rejected the merger with Crompton. Now, does this move come as a surprise, because shareholders were entitled to get 22 shares of Crompton for every 5 shares, in Butterfly, right? So, what could be the possible reason for such a rejection, and does this come as a surprise to you?
Yes, it was a bit of surprise, but when we try to understand the market sentiment, especially for the consumer durable, it's quite high at this point of time. The hopes is very high on these companies, and investor expectation is about to get a much better deal on this front. They are expecting that even if Butterfly go and do other deal, they will be rewarded much better than what Crompton was offering, and probably because of this, some large investor has worked towards rejecting this deal out there. Yes, in a short term, it is a negative out for this thing, this company.
All right. Another stock that I want to talk to you about is, KPIT Tech. Given the fact that the numbers were extremely good, in fact, the company has raised guidance, CC revenue guidance as well as margin guidance at a time when IT giants have seen a weakish quarter. This is one stock that is that saw a great set of numbers, and in fact, we saw the reaction also come in on the stock prices yesterday. Would you say that this stock stands out in the mid-cap IT space, and perhaps one should look at investing in this one?
If you look at the business structuring of KPIT, they are relatively very well placed, and especially their exposure towards the automobile sector, and the global automobile sector is going through a lot of turnaround at this point of time. So if we mix toward these two things and the type of guidance increase which they have done, and the way things are looking out for them, we clearly see that the future still remain very promising for the KPIT from here onward. Also, valuation is not cheap for the KPIT, so that may deter some of the investor to enter. But if you totally look from the growth perspective, the company is doing absolutely fine, and next 3-year outlook is very good for the company.
All right, fundamentals looking good for the company. In fact, we had a query on this particular stock from Selvan. Hope that answers your query. But, lastly, I want to talk to you about L&T, given the fact that the numbers are coming out today. Expectations are that the profits may jump over 20%. And of course, we already know that the company has bagged quite a few orders in the quarter gone by, be it from the Middle East or from, the MMRDA as well. And analysts also expect strong flow of orders going forward. Do you think the company is poised to beat its FY24 order inflow guidance? And what are your own expectations from L&T in the second quarter?
So the industry tailwind is a very positive for the L&T, and going forward, even if you look from the 2 to 3 year perspective, the way in the space where they operate is clearly indicating that things are going to be much better for them. Even on the raw material front, we are finding the cost. The cost side pressure is not there. Neither the base material prices are going up sharply. So the margin side also will be much better for the company going forward from here. So order win is very good. Cost side is being contained at this point of time. So mix of this is clearly indicating a good time ahead for the L&T. Across if you look at Middle East, or even if you look at the India, which is a key market for the L&T, in both the area, their market segment is growing at a very rapid speed, and that's why we clearly see this. There is still a lot of room in L&T from the 1.5 year perspective.
All right, a lot of room for upside for an L&T over the next 1 to 1.5 years. With that, Asutosh, thanks a lot for taking out time and joining in this morning and sharing your thoughts on all these stocks with us. Well, with that, let's go back to Sacchitanand and talk about specific stocks. I want to first talk to you about TVS Motor. The numbers are fairly good, margins at all-time high. In fact, this morning brokerages are pretty mixed, despite good earnings, given the fact that, the company's investment in subsidiaries is something that is, prompting brokerages to retain their sell call on the stock. So if you look at Citi, it has a sell call target price, although has been raised to 1,050 rupees per share. It says that the investment in subsidiaries continues to increase, and that is draining the cash flows for the company. Same with CLSA, even that has a sell call target price of 1,206 per share. But Jefferies maintains a buy rating and has raised the target price to 2,000 rupees per share, and it believes that the company will be a key beneficiary of a recovery in rural demand. Looking at the chart structure for TVS, what are the levels that you'll be watching out for there, Sacchitanand?
Well, the structure is very strong. In fact, despite of the market volatility, we have not seen this particular stock displaying any sort of correction. In fact, if you look at the last 9 months, it has been holding itself well above its 5-month exponential moving average. And even on the weekly scale, the last time we saw TVS Motors, closing below its 5-week exponential moving average was in the month of August. Since then, it has been maintaining its height of hour bottom sequence. Despite of an overbought reading, we still don't have any major signs of divergence when it comes to indicators. So probably, once the stock starts trending above that 1600, 1610 mark, we may see, this particular move getting extended immediately towards 1660 on a short-term basis. But probably, that will be a good, area wherein some profits can be booked. On the lower side, I think it's better not to keep any short bias until the stock displays a very strong corrective move. So far, it has been holding above that 1500, 1520 cluster well. I think only below that, probably we may see a short-term, a corrective move getting unfolded. Else, I think it's better to, retain the bullish bias. And even on a declines around 1550, one can start accumulating the counter with a stop loss at 1520.
All right, bullish view on TVS Motors, look to buy on declines, that's the call. But let's also talk about a UPL, Sacchitanand. Numbers were pretty disappointing to say the least. Stock has been languishing, making fresh 52-week lows. Even brokerages are pretty downbeat given the fact that the company has slashed its guidance. Yesterday, it hit a fresh 52-week low, down 5% over the last, I think, in fact, on a YTD basis, it has shaved off nearly 25% or thereabouts. For someone who's invested in this stock, would you advise them to book losses?
Ideally, yes. In fact, the major, structure has been weak. It failed to sustain above that 600 mark. Recently, it did display, signs of change in trend, but the way it cracked below that 600 mark, it has violated multiple bottoms there. And again, it continues to, display a bearish trend. On an immediate basis, since the fall has been too vertical and steep, we may see some respite here. But on the pullback, it's better to get out of this particular stock. We may see a pullback towards 560, 570 levels, but I think that will be a good opportunity wherein loss can be booked. And on the higher side, until unless we don't see the stock again, trending above 620 mark, the structure still will remain on the bearish side. So it's better to utilize any bounce backs to exit long positions.
All right, use bounce back to exit your long positions in UPL. That's the call. But let's also talk about a couple of more stocks before I come in and take some of our viewer queries. DLF, numbers are fairly strong. Yesterday, it saw a good rally coming in, 4% or thereabouts. And on a 6-month basis, Sacchitanand, the stock is up 30% or thereabouts. At 52-week highs, what should the strategy be on a DLF now?
Well, we still maintain a very strong long bias on this particular counter, especially from a monthly perspective. We saw a multi-year breakout near to that particular level of around 440, and since then, the momentum has also been stronger. We are of the opinion that sooner or later we may see this particular stock scaling towards 630 kind of a zone. So on a declines, even if we see a pullback towards 540, 530 kind of a zone, I think even that level would be a good level to create fresh aggressive long positions. On the higher side, we may see momentum getting stronger once the stock starts trending above 575 mark. On an immediate basis, one can expect a move towards 590.
All right, 590 is a level to watch out for in the short term on a DLF. But let's take up some viewer queries now. Want to take up this query on a BPCL, given the fact that it was among the top gainers in trade yesterday, and earnings have been fairly impressive for this company. Renu Keshwar wants to know whether, she holds BPCL, which she bought at 439, and wants to know whether she should continue to hold or book losses. Would you advise investors to hold on to it and wait for levels of 450 or 460 before getting out, given the fact that numbers have been fairly good, and but crude volatility is something that is weighing in on some of these OMCs, right? So how should she go about this investment?
See, recently, the stock has started displaying some good signs of support around 340 zone. We saw it slipping below it only for a day on the day of expiry, and probably after that, you're again seeing this particular support get reconquered. So I think the base is getting formed somewhere close to around 340, and that's why it's better to maintain the existing long positions here. On the lower side, she can keep a stop loss on a closing basis at 330 on a weekly closing basis. And on the higher side, in case, if you see the stock again trending about 365, I think that will be a good indication wherein the trend may change on the positive side from a sideways consolidation. So I think on a breakout, she can also consider, averaging more on this particular counter. Once this move is sustained, then probably, it may not take much time for this particular stock to again reconquer the 400 mark. So I think it's better to hold on to their existing long positions, keeping a stop loss somewhere close to around 330 on a weekly closing basis, and add further long positions in case if we see the breakout move getting sustained at around 365.
All right, hold your position is the call. Hope that answers your query. But moving on to the next one, this one is coming in from Mahinder Sharma. And he has a query on Dwares Sugar. He holds 2,000 shares at the rate of 99 rupees per share. So he is making some losses on his holding. And he wants to know your thoughts on this stock for the next 6 months.
Well, the price movement has been very erratic since it has been holding on above that 88 and 90 kind of a zone. So probably he can keep a stop loss very close to it, somewhere close to around 85 on a weekly closing basis. And it has been facing a lot of resistance at around 110. So probably that is the level that he should watch out for. Only once the stock starts, trending above 110, then probably we may see a clear trajectory on the positive side. Else, this oscillation mode may continue within, 85, 90 on the lower side, and 110, 105 on the higher side.
All right, that's the view. Hope that answers your query. But the next one is coming in from Ashokan P. Wants to know your thoughts on Castol. He wants to know whether it's a good time to buy into the stock. If you look at the stock, it hasn't really done much over the last 1 month or so. Been pretty sideways, even on a 5-day basis. Would you advise investors to look at this one now?
Well, I think it's always been a classic investor stock. In fact, it lacks that trend momentum. And given the fact that it has been correcting gradually for the last 2 months, I think the floor is well established somewhere close to around 135, 130 kind of a zone. So any declines towards these levels should be utilized to add on to long positions. From a trend structure perspective, the bullishness remains intact unless the stock continues to trend above 118. So I think you can keep a stop loss somewhere close to that. And on a decline up to 130 could be a good accumulation zone. Once the stock starts trending above 145, 150 mark, we may see it, continuing its move towards 175 eventually. So from a long-term perspective, I think it's a good stock to own. On a declines up to 130 would be an ideal level, keeping a stop loss at 118 on a weekly closing basis, and a probable 1 year plus target, which is placed at around 170.
All right, 170 is a 1 year target on a Castol, and buy on dips at around 130 is what Sacchitanand is suggesting. Hope that answers your query. The next one is coming in from Alex, and he wants to know your thought on IRCTC. Of course, rail stocks have kind of fizzled out, in the last 1 month or thereabouts. We've seen some of these rail stocks chugging along and giving up most of the gains that it saw in the earlier part of the year. So would you advise investors to now use these dips to buy into it, or would you say most of the run-up is behind us and perhaps look at some other sector?
No, we continue with our positive bias on IRCTC. In fact, this is the stock we have also recommended to our clients near this particular same area. The overall structure will only get violated in case the stock starts trending below 610 mark, and I think the decline even here has been very gradual in the last couple of weeks. It has been holding itself well near its 200-day exponential moving average. So I think it's an ideal zone wherein some positions can be topped up. From a long-term perspective, the way it has displayed a consolidation. There's a triangular formation exhibiting a target somewhere close to around 900. So probably, you can keep this particular level in mind and continue holding on to it.
All right, that's the view. Continue holding on to an IRCTC. Hope that answers your query. I want to get in your thoughts on QSR stocks now. Mohan Prashant wants to know that, is the rally that, the QSR stocks saw at one point in time, is that behind us, given the fact that, all the stocks like Jubilant, West Side, in fact, Westlife, I beg your pardon, they haven't really seen any kind of a pullback. And of course, earnings haven't been all that crunchy either for any of these companies. So going forward, how should one approach the QSR space?
Well, if you look at Westlife and Jubilant, both have corrected in the last few trading sessions. Especially if you look at the from a trend perspective, Jubilant has still been, finding itself difficult to sustain that lower high top higher bottom sequence. On a daily scale, probably we may see it again slipping towards 480. I think that will be a good demand zone for the counter. But on the higher side, it has been failing to sustain its moves above 530 mark. So I think that will be a broad range for this particular counter. When it comes to Westlife development, I think the trend is on the positive side, despite of the fact that it has seen a very substantial correction of almost 16% on an immediate basis. But if you look at the sequence, the high top higher bottom sequence is well established here. So here I think levels close to around 780 are displaying some good signs of support. So probably one can top up their positions here and expect the stock to again rebound back to around 1000 levels.
All right, that's the view on the QSR stocks. But one last query before I come to your stock recommendations for today. Sacchitanand, this one is coming in from Ashok Kandukuri. He wants to know your thoughts on a Thyrocare for the short term. We know that the stock hasn't done all that well over the last 1 month. In fact, all the gains that it saw over the last 6 months has come, kind of fizzled out. For the short term, say about 1 to 3 months, how would you approach this stock?
Well, for the short term, for the last 3 months, the stock has displayed a good consolidation range. The higher side of the range is placed at around 610. So the moment we see a breakout above 600, 610 kind of a zone, we may see a clear trend evolving here. But for the last 3 months, it has also managed to sustain above that 500 mark on the lower side. So I think the base is getting well established, somewhere close to around 500, 520 kind of a zone. So I think keeping a stop loss at around 480 on a weekly closing basis, any declines towards 510 should be utilized to create some long positions here. But aggressive longs, I think, can be built once the breakout is evident at around 600.
All right, that's the view on Thyrocare. That wraps up our query segment for today. But before I let you go, Sacchitanand, what are you flagging off for viewers this morning?
Nandita, 3 stock recommendations. A couple of them we have already recommended to our clients, so this will be my disclosure. Indigo is first counter, which has displayed a very strong bullish Harami on a weekly scale. Yesterday we saw a good follow-through action there. The 2500 mark, which was acting as a call writer, zone, has been clearly getting valid on the higher side. So we may see a good short covering move here. We're expecting that eventually the stock could rise towards 2630. From an immediate perspective, one can keep a target at around 2550. Long positions are recommended here, keeping a stop loss at 2485. The second stock that we are liking, wherein there is a good sign of a reversal here, is Kotak Mahindra Bank. It has formed a very good base at around 1700. There's a very rare candlestick formation called as bullish homing pigeon. We are expecting that this particular move can unfold towards 1750. And that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 1710. The other stock, the last final stock is GNFC. Even yesterday, we saw a very strong move in this particular counter. If you look at the weekly structure or the daily structure, there's a clear-cut breakout from a flag formation, which is again a continuation pattern. The pattern is indicating a price target somewhere close to around 745 on a positional basis. And that's why we continue recommending long positions here, keeping a stop loss somewhere close to around 664.
All right, those are the recommendations coming in from Sacchitanand this morning. With that, Sacchitanand, thanks a lot for taking out time and joining in and sharing your thoughts on so many stocks with us, and of course also answering all of your queries.
Thank you.
But with that, we've come to the end of this edition of, Morning Trade. But before I go, let me remind our viewers that Mamaearth's 1,700 crore rupee IPO kicks off for subscription today. The IPO price has been set at 308 to 324 per equity share, face value of 10 rupees per share. And, the lot size is 46 equity shares and, of course, thereafter in multiples of 46 shares. Whether it's a subscribe or avoid, you can log on to moneycontrol.com and get to know what experts are saying about this particular IPO. But with that, I'm completely timed out on this edition of Morning Trade. Thanks a lot for tuning in as always, but stay tuned because coming up next is Opening Bell.